Hey everyone, quick heads up. Because Friday is one of those days in the gold and silver market where the move can look random, but it's often not random at all. And it comes down to one simple thing: weekend risk. A lot of traders, especially short term traders, leverage traders, and funds that don't want surprises, will adjust positions on Friday. Not because they suddenly change their long term opinion on gold or silver, but because they don't want to hold exposure into 2 days where anything can happen and they can't react. So if you've ever looked at metals on a Friday and thought, why is this moving like this? I want to give you a framework you can use every single week without charts, without guessing, and without getting emotionally whipped around. Now, this isn't just normal market behavior. Three critical events just collided into Friday that most people don't connect. First, position cleanup behavior. On Fridays, a lot of players do one of two things: they take profits or they cut risk. That means even if the macro story is bullish, central banks, inflation concerns, currency concerns, you can still see selling pressure simply because people are flattening out. Here's the important part: that selling isn't always new bearish conviction. It's often just mechanical. It's risk management. That's why Friday drops can feel confusing. The headlines will try to assign some dramatic reason, but sometimes the reason is people didn't want to hold it over the weekend. Second, stops and liquidity. Friday afternoons can have thinner liquidity than people realize, especially in moments where everyone is watching the same levels and reacting to the same narratives. When liquidity is thinner, it takes less volume to push price. That's when you see what feels like a sudden shove. One quick move that triggers another move, which triggers another move. If gold is sitting near a major psychological level, or silver is hovering near a level everyone's talking about, Friday can become the day where the market tries to run those stops. And once stops start going, the move can look way bigger than the original catalyst ever justified. Third, the narrative reset into the weekend. Friday is when the story gets written. Think about it. Most people do not watch metals tick by tick. They check it casually. They check it after work. They check it over the weekend. So the Friday close matters because it shapes what people believe happened, not just what actually happened. If gold closes Friday strong, the weekend narrative becomes gold is holding up, buyers are stepping in, next week could rip. If gold closes Friday weak, the narrative becomes gold is rolling over, something's wrong, next week could get ugly. Same exact market, same exact macro, different close. That's why Fridays can be emotional and why you need a plan. Now let's stack evidence, because I've been tracking this pattern for years and it shows up over and over again. Here's what they're not showing on CNBC. The weekend itself is a risk event, not just geopolitical risk, though that's real, but also policy risk. Headlines drop, rumors spread, officials make comments, big institutions reposition, and the market hates uncertainty when it can't respond. So what happens? The market prices in a risk premium on Friday. Sometimes that means selling. People lighten up. Sometimes that means buying. People grab the hedge before the doors close. That's why you'll see these strange Friday moves where it feels like gold and silver are trading the future instead of trading the present. Now, I want to give you the clearest practical way to think about this on a Friday. There are basically two Friday setups. Setup number one, the de-risk into the weekend sell-off. This is when metals drift down, sellers press, and the close is heavy. If you see that type of action, the key question isn't, is gold dead? The key question is, was this controlled selling, or did it look like forced selling? Controlled selling feels slow and orderly. Forced selling feels like a shove, like price suddenly drops, accelerates, and doesn't bounce. If you get forced selling into Friday's close, that can set up either continuation weakness early next week or a nasty reversal if it was too emotional. Setup number two, the weekend hedge grab. This is when metals catch a bid into Friday, especially late in the session, because people decide they don't want to be underhedged. That's when gold can look sleepy all week and then suddenly wake up on a Friday afternoon. Silver can do it too, but silver is trickier because silver gets yanked around by risk-on, risk-off behavior and industrial demand expectations. So if you're watching both, a simple clue is this: when gold is firm and silver is lagging, the market is leaning defensive. When silver starts outperforming gold, the market is leaning risk-on. That doesn't mean one is better. It means the market is telling you what kind of fear it has. Now let me bring in the part most people ignore: psychology. History is repeating itself. Not in the sense that prices will match some exact year, but in the sense that Fridays have been decision days in crisis periods again and again. Look back at any high volatility era, 2008, 2011, 2020. You'll see the same behavior. The market trends during the week, and then Friday either confirms the trend or snaps it. And those Friday closes tend to be the ones that people remember. They become the anchor. That's why people get whipsawed. They react to the Friday close emotionally instead of treating it as a weekly signal. So here's my personal approach, what I do, and what I recommend you do mentally, not as advice, but as a way to stay rational. I separate Fridays into two categories. Category 1, Friday confirms. That's when the close lines up with the week's direction. If metals were strong all week and Friday closes strong, that's confirmation. If metals were weak all week and Friday closes weak, that's confirmation. Category 2, Friday traps. That's when Friday does something dramatic late, either dumps hard or pumps hard, and it's designed to force emotional decisions. These are the Fridays where people sell at the low because they can't stand the pain, or they chase at the high because they can't stand missing out. And then Monday comes and does the opposite. So what do you do with that? You stop treating Friday as the truth and start treating Friday as the final exam. If you see a dramatic Friday move, you ask, was this move supported by a real shift in expectations, or was it mostly positioning and stop runs? Now let's make this personal. Let's say you've got a normal portfolio, retirement accounts, some stocks, some bonds, maybe a little precious metals exposure. When Friday gets wild, you feel it because it changes your mood going into the weekend. If gold is up hard Friday, you feel relief. If gold is down hard Friday, you feel stress. And that stress is what causes bad decisions. So here's what this means for your portfolio. You need a weekend plan, not a trading plan, a mental plan. Your plan should be, if I see a big Friday move, I'm not making a major decision until I see what happens when markets reopen. Because the market is closed, but the narrative machine is not. You're going to get headlines over the weekend. You're going to get hot takes. You're going to get people saying this changes everything. And then Monday opens and half of it gets reversed. This affects your money directly because the biggest losses typically come from emotional decisions made at the worst time. Selling after a panic move. Buying after a euphoric move. Friday is where those traps get set. Now look, the question isn't whether gold and silver will be volatile. The data is clear. When markets are sensitive to rates, sensitive to macro headlines, and sensitive to positioning, metals will swing. The real question is, are you positioned for what comes next? And are you mentally prepared to not get manipulated by the Friday close? Right now, the only thing I want you to do is watch the close like a signal, not as a verdict. Because the Friday close sets the tone for weekend psychology, and weekend psychology sets the tone for Monday flows. This is educational content, not financial advice. Do your own research. Consult licensed financial advisors before making investment decisions. These are market observations and analytical frameworks, not buy or sell recommendations. But the pattern tells the story. All right, before you go, 3 quick things. 1. Drop a comment below. Tell me where you're watching from, and tell me your Friday prediction. Do you think metals finish strong into the weekend, or do you think we get a late day shakeout? 2. If you're not subscribed, hit that button now. I'm putting out unfiltered analysis consistently. And listen, I'm fighting copycat channels stealing this content. If this video provided value, comment "Truth wins," so the algorithm knows you're here for the original. 3. Next video drops soon, and I'm covering the one data point that tends to show up right before the market flips the Friday narrative on its head. Last time it happened, it caught almost everyone off guard. You won't want to miss it. See you in the next one.